Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Friday, guys. Friday, and it is February the 6th. Welcome, everybody. Thank you so much for being here. If you're here this morning, I would love it if you would drop your name in the chat and if you would say hi. This is a friendly, interactive place. I work with traders of all levels, but I especially love helping newer traders get started on their journey. So there are newbie questions, whatever you want to know, I am happy to help you with. So please drop your hi in the chat. Please drop your questions and let's trade together. Let's see if we can get some trades today. We're going to do market. We're going to do some live trading if we get the right setups, and I'll answer all your questions and comments. Okay. It looks like Anna is here this morning. Good morning, Anna. Thank you for joining. All right. So let's talk about what we have got going on so far today. Let's look at this chart here. And I'm going to give you some analysis. I have done some in-depth analysis on the markets. And I'll say I'm starting to see some cracks. I'm starting to see the market begin to crack and maybe break. So I'll go over all of that in just a minute. But right now, let's look and see what the charts are giving us here. So as we opened up today, we opened with a big jump up. We were already gapped up, and then after the open, we did this push, and it got up almost. I think it was almost 1.3, 1.4% is the rise that we've done today, and that is a strong push. So we are also watching some divergences, I should say, because we've got some of the Mag 7 down today. We've got the MAGS ETF itself down today, but yet we've got the market moving up. Well, what's pulling the MAGS down today is Amazon. So Amazon reported last night. They did okay. But their stock dropped. So Amazon is down today, roughly 7-8% right now. It's been down as low as I think almost 10%. Gap, how are you? So even though the market is appearing strong, we also have some really low dips in our overnight action. So we came down overnight. Let me show you this line. It's way down here. On the ES, we came as low as 67.55. We're currently sitting at 6,900. So that tells us what we're down 100. We were down 150, 160 points from our current level. That is a big drop. And this is the pattern that we got on Monday. If you guys remember, on Monday, we had a 100-point drop, and then the market opened with a pop and it climbed all day. So far, we are copying that pattern, and it's an unusual pattern. We don't usually see these kind of major drops, especially in the pre-market, and then the market go a complete opposite direction. We do see that, but we don't see it at this level with these 100, 150 point swings. So part of that is due to the fact that we are in an elevated VIX environment. So when we see elevated VIX, meaning the volatility index, the index is rising, the fear is rising in the market, when that happens is when we start to see these cracks and these little weird behaviors that we don't normally see. Part of that is the VIX, right? Good morning, Bill. Good to see you. So glad you're here. So again, it's odd. What's happening today is odd. This low overnight, 100 and what did I say? 30, 40 points below us, somewhere in there, a good bit below us, and a strong climb today. Now I'm going to show you the daily charts, and I'm going to talk about some things that I have been analyzing on the Mag 7 and the major indices, and it's starting to look not good. It's starting to look like we could be headed into a period of extended selling. That's my analysis right now. And I'm not talking about today. I'm talking about big picture over the next days, weeks, and even months. I think we could be headed into a period of selling. So we'll talk about that in just a second. Let's look at this chart right now and see, is there any trade at the moment? I've taken a couple of trades this morning. So far, I'm doing just fine. I've met my goal and then some today. But what have we got so far? What we've got is a zigzag slow climb. That's what's happening here. So push up, we went down to the VWAP, tested the VWAP, pushed up, went down to the VWAP, tested the VWAP, pushed up. And every time we push up, we're going just a little hair higher. So here was our first high. Here was our second high. And here is our current third high. And they're just teeny little higher highs. They are still higher highs, which means we are still in an uptrend, but they're tiny. It resembles more of a range than it does a trend day, but that doesn't mean we aren't in a trend day. The notable thing also is that we are still in negative gamma, and that's really interesting. With this strong push, we're still sitting on negative gamma. What the heck? That means, when I say negative gamma, that means that big money is hedging their bets to the downside, right? Odd that we're hedging our bets to the downside with this big run up today. And I'm going to have to retract that because we just shifted into positive gamma right now. So our call wall on the gamma side is sitting at 690. Well, that's about 30 points overhead. And our put wall is sitting at 680. So that's a big spread. We have a pretty big expected move today right now, sitting at about $6 on the SPY. So let's come over here and look again. 690 is going to get us about 30 points higher. Is that possible to do today? Yeah, I think that's possible. So could we keep climbing? Yes, we definitely could. But I think this is what we call a dead cat bounce. And if anybody has a cat, I apologize. I don't wish to offend. I have a friend who works in the finance industry, and he was in a corporate meeting, and he said, this is nothing more than a dead cat bounce. And that term is older than you and me combined. It's an old term in the market. It means, it's gross, right? But if you drop a cat, it's going to bounce a little bit and then it's going to fall down if you drop a dead cat. So he said, this is nothing more than a dead cat bounce. And apparently one of his coworkers had just lost her cat and basically lost her mind and was so offended and called him out. And, it's sad that she lost her cat. But this is an old saying, and the market has some weird old sayings. So in my opinion, we could be looking at a dead cat bounce. And I'm zoomed out looking at the bigger picture. Today, could we drop? Yes, it's looking stronger than weaker today. But in the bigger picture, I think this is a dead cat bounce. And I'll show you what the daily chart looks like and what a dead cat bounce would look like. Let's look at the SPX. All right. With my wild lines. But you know what, guys? My lines are coming in handy. Do you see them? Do you see where they are? I've got a line right here. This line has been respected how many times? Look at this line. This is the 6,800 level. And look how many times it's been respected. Here, 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 here. It's very strong level, right? So all my crazy lines, they do mean something. I'm sorry they're hard to read, but they do mean something. So this bar today, this is a daily chart of the S&P 500. That's the index, right? This is a chart of the S&P 500. What do we see? We see what's notable, right? So when you look at a chart for technical analysis, when you're looking at a chart, what you want to do is you want to zoom out and see, what does your eye notice? What do you notice the first thing when you analyze a chart? Zoom out and let your eye take you where it will, and notice that. You're going to develop those skills. The more you read charts, the more it'll become a second nature, the more these patterns are going to pop out at you. So the first thing about technical analysis is zoom out, go to a higher time frame, and see what stands out. Well, what stands out to me on this chart is the support right in here, right in here. Look at this drop that we just had mid-January. We have come down. The wick came down farther. Let me zoom in so you can see it better. The wick came down farther, but the close of the candle is almost identical. Where? Right here at this 6,800 level. So what pops out to me first thing on this chart is this double bottom right here. This rollover twice on the market. And the next thing that pops out to me is the fact that we have now officially broken the upward trend line. So you guys know I drew these green lines a couple of weeks ago, right? And I drew this, and what did I say? I said we are creating an ascending triangle, which is a continuation pattern. And as we move into the point of the triangle, we are either going to break this wedge to the upside or to the downside. Well, we have now broken it to the downside. So that's the next thing that stands out to me on this chart. We have broken the upward trend line. Now, today's candle, let's zoom in, is trying to recapture, okay? The third thing that stands out to me are the moving averages. The 50-day moving average is a big one. That's an important level. That has been breached. Not only has the 50 been breached, the 100 has been breached, and that's major. That is major territory when we breach the 100. But what happened? We reclaimed it yesterday. We came down, we breached it. We touched my other red line here. That is the 67.75 level. We came down through the 100, breached it, and recaptured it. That was bullish. I knew when we recaptured the 100, we'd probably get a bounce today. Is it the question for me of today is it a dead cat bounce? This is a strong candle, very bullish. But is it nothing more than a dead cat bounce? Meaning that we bounce up, but we don't get to the highs. We bounce up, it looks strong, right, on the surface, and then boom, we roll over with a strong, sharp down move. Is that possibly what's in store for us? It is possibly what's in store for us. Of course, the other option is we continue traveling up and retake these all-time highs. That is less likely, and here's the reason why. I've done a lot of study over the last couple of days. I have analyzed every chart of the Mag 7, and I have analyzed all 4 of the major indices. And what I have found surprised me a little bit. I knew that the Mag 7 was rolling over. That Mag 7, remember, that is the Magnificent 7. Apple, Amazon, Microsoft, Meta, Tesla, Google, NVIDIA. Those guys make up a big chunk of the S&P 500. They also make up a big chunk or the whole part of the NASDAQ. By the way, I am looking at a possible put here, guys. I'm going to load the 687s right now. 687 puts for today's expiration. I'm watching this little roundover right here. I want to see if we come down and try to make another run at the VWAP. It is possible. I'm going to go ahead and take this put here. I am in, punch it. We'll get back to our analysis of the Mag 7 here in a minute. Just baby green right now. Got a couple of points right now. Nothing major. A little bounce here. A little bit negative now. Coming back down. All right, Gavilan, does it expect a drop below the VWAP? We haven't dropped it today below the VWAP, so I can't answer that. So far, we bounced off of the VWAP. Roberto Gaspar, good morning. Sorry. No, don't be sorry. I'm glad you're here, and thank you for saying hi. So far, we have not broken the VWAP, but that doesn't mean we won't. I need to see if we come back down to it and if we make a pass at it. All right, now we're just a little bit flat on our profit, nothing green. See if we can get a little push here to the downside. It's trying to hold. Need to push down through this 21 right there, this yellow line. Really trying to hold it here. Bouncing off the 21. Quick little drop down would be helpful, but no, we're pushing back up to the top here. That's great. All right, we'll give this a little bit of room. And just making these tiny candles. These moves are very hard to trade when the candles don't move so much. Down about 9% right now. All right, looks like we could be coming back down. Come on now. The beauty of this type of scalping is we don't need super big moves to make profit. We just need little moves. The downside is little moves the wrong direction go against you quickly as well. All right, so there's another push. QQQ. All right. BD, I'm through with trading for the day. Tried your method of trading with market orders. Did very well. Just here to hang out with the cool kids. BD, glad that you did well today. Glad that the market orders are working for you. That is the only way that I can do it because of the usually the speed that I'm in and out. Roberto, QQQ. Do you want me to analyze it, Roberto? I'll take a look at that for you in just a second. We are getting a push here, so that's hurting my trade right now. I do expect some drop here, but they just keep pushing it, don't they? Come on now. Yeah, let's take a look at the Qs real quick, Roberto. Looking very similar chart. On the Qs, we opened below the VWAP, pushed over it, came down under it, came over it, came down under it, came over it. Very similar to the SPY. All right, we got a little push back down here. Come on now. Let's go. So yeah, Qs are also climbing today, up 1.5%, and we are sitting at 1.4%. We're neck and neck with the Qs. All right, we're at the top of the outer edge of the VWAPs, and we are overbought. So let's see if we can get a little push down here. Just a little. We don't need much. Just a little one. All right. Back to the SPY. Tiny candles here. So, yeah, glad those market orders were working for you, BD. That is the only problem with market orders is slippage. So with a limit order, of course, you're going to get filled at your limit. If you are in a market order and you've got some there, basically when you hit the market order, there's a lag, and that lag allows for that order to go against you. Sometimes it can be by a decent amount. So that is the only problem with market orders. It happens that way. There's nothing we can do about it. It's still, for me, the best way of getting in and out quickly. All right, so getting little candles here. Now back to the Mag 7. So I'm going to go over the what I'm seeing on the charts, and let's go over some basics, right? When we look at the market coming down, a pullback is defined as coming from the all-time high to the 10% mark. Anything inside of there is what we would call a pullback. When we get over 10% but under 20%, this is called correction. So anything that is under 20% but over 10%, we would call that correction. When we get below a 20% drop, that's called bear market. So a 20% drop from all-time high, 20% drop is where we enter bear market territory. So, and that's the danger zone, right? That's where we start. That's where things start changing and turning. What I found surprised me a little bit. Good morning, James. It's so good to see you. What I found surprised me a little bit. I knew that the Mag 7s were rolling over. I knew that we were seeing distribution in the mega tech stocks. I knew that. What I didn't know is really how far we've dropped and how quiet everyone's being about it. Are you hearing anybody screaming that Microsoft is down 30% from their all-time high? 30%. I don't see anybody in Finwit talking about that. Maybe I'm not looking in the right places, but what the heck? That is something to be aware of. That is something to perk up your ears about, because as the Mag 7 goes, as the Magnificent 7, as these ETF, or excuse me, these big mega tech stocks go, as they go, so goes the NASDAQ, so goes the S&P 500. So it is really important. You guys know that I keep the mags up here and I'm watching them all the time. The mags here, the VIX here. That is what I'm doing. When we are looking at a 30% drop on Microsoft, and I'm exaggerating, it's 29.1% drop. We also have a 20% drop on Tesla. We have a 19% drop on NVIDIA. What? These guys are now in bear territory. We are in a bearish market for 3 of the 7 mega tech stocks. What? That's worth paying attention to. So as these Mag 7s continue to drop, if they continue to drop, we are going to continue to see downward pressure on the S&P 500. That's the problem, right? Now, the next biggest drop, so we've got Microsoft, Tesla, NVIDIA. Oh, hold on, I'm going green, guys. Hold on. All right, I'm up 7%. I'm out. Punch it. Did you guys follow on that one? I don't know if y'all did or not, but that was a cute put that we took. Took us a hot minute because I got the signals way over here with the MACD turning, right? We see the MACD turning. We see the whole moving average turning down. And what happened? They pushed it up. So I had to wait. And I think I saw as much as a 25% loss. So I have to give my trades some room to breathe. I have to. 50% is my drop dead stop loss. Sometimes I dollar cost average. When I hit 50, sometimes I dollar cost average. I try to make sure that if I dollar cost average, I am the trade stands on its own. So I don't dollar cost average just because I'm losing. I dollar cost average only if this trade would stand on its own and if it's a trade that I would take regardless of whether I was in the losing trade or not. Okay. So I'm jumping all over here, but I'm trading and teaching at the same time. So bear with me. Okay. Out of that trade, we did good. I'm actually really doing good today in my account. So I'm happy. I'm up about 15% in my account so far today. Okay. So back to the analysis of the Mag 7. This is really important, guys, because if we are entering into bear territory, into a bear market, everything shifts. Here's the good news, guys. Good news. Number one, my style of trading, the bulk of my account, I trade it every day. It's in cash. I'm constantly rotating it. I do have some long-term holdings, but not a lot, mostly in crypto, which are sucking right now. But the majority of my account is in cash. I'm not saying you should follow me in that. It's not investment advice. You should have, money put away for a rainy day, money put away for your investment, for your retirement. But for me, because I am confident in my strategy, I prefer to take the bulk of my money and rotate it daily. I increase my holdings quicker that way. And so the good news for us is that we are light on our feet, right? So if the market is beginning a downward slide, and I think it might be, if that's happening, we get to trade the market every single day. We're light on our feet. We trade like water, right? We are following the path of least resistance. My motto is be like the krill, follow the whales. They leave footprints, they leave clues, follow them. And so we can pivot every single day, multiple times a day. We can pivot because we're light on our feet. So that's number one. That's the good news. Number two, I'm good in a down market. I don't know why. Call me Debbie Downer, call me whatever. I trade better in a downward trending market than an upward trending market. I make money both ways, but I see moves better in a bear market. The good news for you guys is that I've traded several crashes. I've been trading since 2007. I traded the crash of 2022. I'm comfortable trading crashes. I'm good at it. I see the moves. I make money in a downward trending market. So that's good news for you all who follow me. I will navigate us through this. If we are beginning to drop, I'll navigate us through this because it's different trading. Your thinking has to change. If you are a newer trader and all you've seen is this beautiful, blessed run that we've been on, that's not the reality of the markets at large. And so if you've never seen a downward trending market, a bear market, a crash, it's going to blow your thinking. It's going to blow your mind. So the good news is I'm good at that. I'll lead us through it. We'll be fine. We're going to make money. Okay. We're going to make money one way or the other. Okay. So that sums up the Mag. No, it doesn't quite sum up the Mag 7. So we had Microsoft, Tesla, NVIDIA, all entering bear markets, right? Anna saying that sounds amazing. Thank you, Anna. All entering bear markets. Okay. Who's next? We've got Amazon down 14%. Now these numbers are valid as of this morning's snapshot pre-market. So as of yesterday's close. So these numbers are going to shift today, of course. But Amazon down 14%. Meta down 16%. Let's see. Apple down 4.5. Google down 5.4. So those guys are kind of the shining stars, and they're still down 4 and 5%. Now, the mags as a whole, the ETF that I track, that holds all of the Magnificent Seven. The mags as a whole is down 10%. So they have gone past what we would call a pullback, and they have entered into correction territory. Correction territory, think of it this way. It's when the yellow light starts flashing, right? We're not at DEFCON 5 yet, but the yellow light is flashing when we hit correction territory. When we get to bear territory, the red light is flashing. The check engine light is on. But the correction territory, that's the yellow light flashing. It's like, oh, okay, we have dropped more than 10% from the all-time high. We're in trouble. We need to be paying attention. So that is the overview of the Mag 7, and that is what is going to move the NASDAQ and the S&P 500. Now, here's the interesting part. Mags as a whole are down 10%. How far down is the SPX? As of this morning, which was a point and a half worse than we are now, as of this morning, we were only down 2.9% from the all-time high. Interesting. NASDAQ was down 6% from the all-time high. So NASDAQ is flashing those warnings a little bit brighter than we are. Their yellow is starting to fade into orange. They're starting to flash because NASDAQ has lost their 100-day moving average. That's a big deal. And they're pushing down, 6% down, right? Still nowhere near as far down as the MAGs and most of these big tech stocks. They're not down that far yet. Now, the Russell is down 6% and the Dow is down 1%. What does that tell you? That tells me rotation is going on. Rotation is happening. So when we start seeing the NASDAQ and the S&P 500 come down, well, where is that money going? Certainly it was going into precious metals, right? We see money going into precious metals, gold and silver specifically, but palladium, copper, those guys are definitely benefiting as well. So money is going into precious metals. But it's also looks to me, if you look at the Dow, it's going into blue chips. It's going into the Dow. So, Roberto, what is NASDAQ? Great question, Roberto. NASDAQ is the index that holds the high-tech stocks. So there are 4 major indices. We have the S&P 500, we have the NASDAQ, we have the Russell, which is the small caps, and we have the Dow, which is the blue chips. Those guys make up the bulk of the NYSE. The New York Stock Exchange is almost completely housed in these indices, right? So the NASDAQ is the one that's all tech. So we would expect to see it suffering a little bit more than the S&P 500, but the S&P 500 is heavily weighted toward tech. So we are seeing the S&P 500 not getting hit quite as hard. So all that to say, money is rotating out, it looks like, out of S&P 500, out of NASDAQ, into precious metals, and it looks to me like it's rotating into the Dow. Now, sometimes we see it rotate into small caps, which is the Russell, but right now, small caps has been increasing too. But right now, I'm seeing it moving into the Dow. So that's interesting. That's a kind of new thing to see. That is where we are at. So if you look at this chart of the daily, you can see we talked about what is the first thing your eye sees. Well, we talked about this double bottom right here, but also what do you see? This looks like what we would call classic distribution, Wyckoff distribution. You can look that up. You can watch some videos on it. Basically, in a nutshell, Wyckoff was a guy, a long time ago who analyzed the market, and he came up with some patterns that he saw. Wyckoff accumulation and distribution are kind of the most famous. Basically, what he said was when we see the market doing this herky-jerky stuff, range bound, sideways, technically we've been sideways for really since November. Even though we're getting a slight upward bias, this is really sideways movement, right? Wyckoff distribution says when you see this bouncing, it's big money moving the market up so that they can offload a little bit more. Remember, the whales cannot get out of their positions like we can. We can get out right now, no big deal. Whales can't do that because they have such big positions that if they start selling, they're going to turn the market against themselves. The market will start dumping and they're going to not be able to get out in time. Their positions are too big. So they have to sell in chunks and it takes them days and weeks. So when we see this kind of, Wyckoff says, when we see this kind of herky-jerky, either two things are happening. We're either seeing accumulation or distribution. The market isn't truly going sideways. Things are happening under the hood. So what's happening under the hood, if this is distribution, is that big money pushes up to these highs and then boom, sells because what they've got a good price here, right? Oh, I can get it up to 69.50 and I can sell here and make a ton of money. Okay, they sell, it drops down. They push it back up. Okay, here we go, 69.70. It's sell again. Look how far they dropped it. All the way down to 6,800. Pushed it back up again. And then what they do? Boom, they sold it again. Now, this could also be accumulation, but I don't think so. It doesn't look like accumulation to me. So that is what you see when I look at this chart. We could be moving into or coming through a phase of distribution. Eventually, once they're done distributing, once they're done selling, you will see the market react to that. It's going to, the bottom sort of falls out because they stop pumping it up. They've already got out of their positions and then woof, they just let it fall. This could be what's happening. I'm not saying we're entering a bear market. I'm saying it looks like it could be happening. We will still continue to trade the market every day and trade what they give us because we can't hold biases. That doesn't make sense. If we hold biases and we're wrong, we're going to lose a bunch of money. So we can make our big picture macro view, but we can't die on that hill. We have to be willing to change our mind if the market says something different. Okay? All right. Aggie, good morning. Asking, what do I think about Bookmap? I love it. I have Bookmap. I think it's a great tool. I find it more useful in stocks that have lower float, less liquidity, because in the SPY, there's just a lot of spoofing. Spoofing is when they set orders at levels and they really don't intend to fill them. They're just there to spoof the market up or down. And so Bookmap catches those. I love it, but it doesn't work as well for me when I analyze the SPY. It does work for different lower float stocks, lower liquidity stocks, but I do like it. I like Bookmap a lot. All right, so we are still climbing up here, 688 almost. We're about to hit 688 on the SPY. Okay, so it works better in 4X, for example. It could, yeah. I have not traded 4X, but I could see it working in 4X, absolutely. Now, spoofing exists everywhere. So, you know, some of those orders are going to disappear. So Bookmap will give you kind of these bubbles, right? It gives you these bubbles and these lines of where orders are sitting, right? Where bigger money orders are sitting. Bookmap will highlight those. And I love that. But anybody can spoof. And so it's a good tool. You just have to know to use it with other indicators as well. No indicator is perfect. All right, still climbing here. So as far as taking another trade, I'm going to wait until we get another turn down. We did get across here so see how the MACD crossed up here, right here. But we couldn't have made any money on the move. Now, it doesn't mean they're not going to keep going up, but right now there's no money in this move. There's no money to take a call right here. There's no money. We're getting, you know, a little bit of a slowdown here at the top, but there's no money to be made. One thing to notice on the MACD is when these bars are short and stocky and kind of like this, little stubbies, and these two MACD lines, the average and the signal line, when they're kind of on top of each other and moving horizontally, that does give you a warning that we are sort of moving sideways. We're not really committed. Even though it looks like we're moving up, we're not really committed to this upward direction. So I'm not taking a call here. I am going to wait and see if we can get the MACD to roll down, if we can get this whole moving average to curl down again, just like we did over here. We took the put here and I got out down here. That was a fun trade. So as we began to move down, I might consider another put, but we're getting tiny candles. We're not getting a ton of movement at the moment. All right. Anna wants to get a call. All right, Anna, seems bullish. It is bullish, Anna. 100%. You are correct. We are up 1.5 points. Today is a bullish day. So you are not wrong for wanting to get a call. However, how much farther is it going to go? Let's take a look at our volumes and let's see where volume is sitting. Right now, we have volume sitting on the call side at 690. So 20 points overhead. Could we hit 690? Yeah, we absolutely could. Volume sitting on the put side at 684, so about 30 points below us. But the volume on the call side is definitely much higher than it is on the put side. However, we do have some open interest on the put side that we don't see on the call side. Open interest is a snapshot of everybody who was holding this particular option as of last night. So open interest gets calculated every night. It's a static number. It's not dynamic. That it will stay the same all day long. And it is only as good as last night's snapshot. Those people, everybody in this open interest, they could have exited their positions today. We don't know it. That's a static number. All we know is as of last night, this is where money was parked. 670, 675, 680 on the put side. And we've got some open interest on the call side, but it's a little bit more dispersed, right? So in answer to your question, Anna, could we go up higher? Yes. Looks like the volume is sitting at 690 calls. Could we go that high? We could. Do we have to? No, we don't have to. So if you're going to buy a call, see if you can get a little bit of a better entry, maybe on one of these little downturns here. But yes, we could absolutely keep climbing. That is, the VIX is dropping, and it is possible that we climb all the way up to 690. We could climb beyond. But right now, it is a climbing market. So you are correct. I'm going to take a look at the gamma. We are sitting in positive gamma. Now, we've been in negative gamma most of the morning. Positive gamma also sitting, call wall, at 690. Put wall sitting at 680. That's 100% difference. So we have a big distance on the gamma, meaning dealers are hedging up here at 690 and down here at 680. That's 100 points on the SPX. All right, here's a little downward move here. The MACD is starting to turn, but we're still getting these teeny stubby candles. Could we consider puts here? We could, but I'm going to give it a minute because these candles are small and there's not a ton of volatility at the moment. It's not moving very quickly. You are welcome, Anna. If you do take calls, see if you can get a better entry. All right. Not a lot happening here. So look at this MACD. Yes, we're getting some movement, but look at these lines. They're real close to each other. The candles are stubby. So from basically here on, we got a little push here, but we're just not making a lot of movement right now. So that's usually a condition that I steer away from. When I see kind of this sideways chop happening, I kind of push away from that and wait for it to give us a better direction. Amazon is still not really recovering. So I want to take a look at the Amazon chart. Amazon is what's pulling the mags down today. Google is down, Meta is down, so those are helping. Oh, but Amazon reported earnings yesterday, did okay, but dropped pretty hard after earnings. So it's still trying to recover, and it's just not. It's come up a little bit, but it's just not recovering significantly. And so Amazon's pretty much responsible for pulling all the mags down today. And we have a little bit of a divergence with the mags being down and the SPY being up pretty hard, a point and a half. SPY is up 1.5%, 1.49. So pretty big divergence there between the mags and Amazon and the SPY. So that's another thing that's kind of got me thinking, dead cat bounce? Maybe. Okay. No real push down here, just watching still. Nothing major yet. The VIX is giving us a drop and then a little sideways movement right here, hitting a low at 18. Still decently elevated for the size of the push we have today. The VIX is still decently elevated. All right. Now, could we get another leg up here? So they turn and push this up. Could we get another leg up? Could we hit 690? It's possible. So I might be open to a call here if it pushes up, but I want to see these bars on the MACD. I want to see those stretch out a little bit. They're just tiny right now. So no trade at the moment. Let's see if we can get the VIX to drop below 18. If the VIX drops below 18, I might be tempted to go in here on a call. We're sitting right now at 18.01. If the MACD rolls up, which it's doing, starting to, could we take a call? Maybe. No move up just yet, no confirmation. And I don't know if anybody follows crypto. I do. MSTR reported yesterday, really stunk it up. The MSTR has been under attack by the major institutions. They would love nothing more than for MSTR. There we go. There's a new high. I'm going to load some calls here, but I'm not going to get in just yet. I'm going to load the 687s right now. I don't know how much more room we have overhead. That's my concern. You know, could we hit 690? Yes, but we don't have to. Do we have any more room overhead? We've been climbing all day. Are we ripe for a pullback? I think we are. So I'm cautious here. I'm not taking them yet. I'm just looking. The MACD hasn't rolled over yet, and these bars have not increased yet. So I'm not going to take it just yet. I'm still waiting. My gut feel is to wait this out, it's tiny climb, but it's more range than anything. So my gut feel is to wait this range out. We got a good put. We got 7% on it, so I'm okay with that. Sitting on your hands is a position. Holding on to your cash is a position. Don't be afraid to not be in the market, right? Don't be afraid to sit it out. If it's just not giving you the setup you want, it's okay to wait. That is key. That is huge in trading. So back to MSTR. So MSTR is the largest corporate holder of Bitcoin. And I think maybe like the third or fourth largest holder in the world. So MSTR holds a bunch of Bitcoin, like in the to the tune of, I want to say like 60 billion worth or something, somewhere in there. I think their value has come down since Bitcoin dropped. But MSTR has come under attack, has been under attack for months. And its theory, I've got my foil hat on, so, take it with a grain of salt. Institutions have now gotten on the Bitcoin train. How do we know that? Because the big ones, BlackRock and who are the others? There's a bunch of them. Goldman Sachs, a bunch of them have gone out there, and what have they done? They have built their own ETFs. What's an ETF? An exchange traded fund. It's basically a fund where you throw a bunch of stocks in there, whatever they might be, and you sell the shares of that fund. So the SPY is an ETF. The Qs are an ETF, right? There are ETFs over Bitcoin. Who creates ETFs? The big guys, the big money guys, the BlackRocks, the Goldman Sachs, the Morgan Stanleys, all the big ones. They create the ETFs. And why do they do that? Why would they create an ETF? Well, they make money on it. So they charge fees and to get into, you don't pay a fee to get into an ETF, but there are fees inside of it. And they make money on their holdings as those holdings go up. So big money is in, what are they in? They're in Bitcoin, they're in Ethereum, they're in crypto. How do we know that? Because all these ETFs came out just a couple of months ago. Within the last few weeks, these ETFs have come out. So why would Bitcoin be sinking, and why would they be wanting MSTR to fail? Nice drop here. I kind of like puts. I'm going to load 688s right here. I'm loading the 688 puts. I'm not in them yet. I'm watching. I like it. VIX got a little bounce up to 18.08. Just watching. All right, I'm going to jump in. I'm in these puts, punch it. It's moving really slowly, so I'm not going to try for a super big win. Moving super slowly. Is my screen frozen? Everything's frozen. I can't see what's happening. Oh my God. Oh my God. I don't know what's happening. Okay, unfroze. Jeez Louise, that was freaky. I was frozen up there for quite a few seconds. That is no fun. All right, I'm fixing to jump out here at 9%. Punch it, I'm out. Yes. All right, that's a 7% and a 9% winner, guys. I hope you guys were able to follow. Hope you could make some money on that one. I am killing it today. Not trying to brag, but it's been a good day. Okay, BD went ahead and took another trade, strike 688 puts, still holding it. Maybe a loser, tight stop, out at 140. Great job, BD. Sweated on that one. Too much money on the table. Watch your position size. I'm glad you're cognizant of it. Watch your position size, especially when we've got this creeping market like this. But good job, BD. Great trade for you. All right. So I'm going to finish up my my rant on MSTR, and oh, look at it. Now we're going to go. Here we go. Anna, I hope you're not in a call. I hope you didn't take it. Here we go. Nice little drop. Volume picking up. I think we're coming down a little more. We may come down and test the VWAP. Let's see. Not yet. Good job, Anna. Good job. All right. Finish up my rant on MSTR, and we'll watch this and see if we come down to the VWAP. So big money that is holding these ETFs over Bitcoin wants, look at that volume there, wants MSTR to fail. Why? Because as MSTR fails, they are going to sell their Bitcoin at ridiculous low prices. If MSTR does fail, they're going to have to liquidate at ridiculous low prices. Guess who benefits? The big ETF holders, right? The guys with the deep pockets are going to go out there and swoop that up as quick as you can say Bob's your uncle. So that is something to be aware of. This, I believe, just like that silver crash, I believe this Bitcoin crash is manipulated. We have government adoption. We have institutional adoption. Bitcoin is faster, safer, cheaper than any of the products that we use in the financial world today. Somebody tell me why in 2026, it still takes 5 days to get a freaking deposit into your account. Why? There's no excuse for it. They are holding your money hostage. They are using it. And Bitcoin, crypto, that whole space does it in a fraction of a second. They do it error-free. They get rid of the fraud. Like, it is a much better system, and everybody knows it, but big money is fighting it, right? And quietly, you know what they're doing in the background? You know what big money is doing in the background? Big banks? They're building their own crypto rails. Yes, they are. They are. So just keep that in mind. I'm done with my Bitcoin rant. I'm done. Okay. No trade here. So one of my rules is I do not trade the same move twice. Occasionally I do if it really makes sense. But right now, one of the main rules is I don't trade the same move twice. So we are watching this. I think we might come back down and test the VWAP. That is possible. But it's still not making big moves. We're still just kind of hovering here between 686 and 688. No real movement yet. So we're at the end of the stream, but here's the trade plan moving forward. I think we could get as high as 690 today, but be careful. I wouldn't be careful buying the top. If this is a cute little pullback, we could maybe consider going long here, but I still don't think I would. I'm more interested in seeing if we can come down and get another test of the VWAP. If we come down and then start making another leg back up, I would trade that to the upside. If we come down a little bit farther, I'd like to see a little push up first and then another leg down to trade to the downside. Anything below the VWAP is going to be more bearish, so I'll be watching for that. But right now, I'm not super interested in buying this top. I'm not saying we can't hit 690. We can, but right now, I'm not super interested in buying this top. And if I miss a move, I'm good with that. All right, guys. All right, Johnny Tran, nice knowledge. Thanks, Johnny. All right, you guys, it's been a pleasure. Thanks for being here, everyone. I sure appreciate you. I love having you guys to trade with, and it always makes trading so much more fun. All right, BD, have a great weekend. You guys have a great weekend too. Let's do what matters. We got Super Bowl. That's fun. I'm going to be hanging out with my family. Let's do what matters. Enjoy the people you love. And we'll be back to pounding it on Monday, and we'll make some more money on Monday. But you know what? Let's take these weekends and these moments, and let's enjoy what's important, our friends and our family and our loved ones. All right, guys, I appreciate y'all so much. We'll be back on Monday at 11 a.m. Eastern. Bye for now.